everybody? Welcome back. Happy Wednesday. Final hour session just after 3 p.m. Eastern Time on October 1st. New month, new quarter. Markets at all-time highs. Government shutdown. Futures market was all over the place. We were down about 0.8% coming into today's open. That retreated to about 0.3%. We did gap lower. We ripped up. We pulled back. We hit the positive gamma pivot around 66.60, and the market went up about 60 points, which is three times I guess double what was expected. We had a plus or minus 30 on the day. It's up 60 points from the lows. All this was mapped out this morning. So here is what it looks like. Here's my daily profit play indicator. Futures, like I said, overnight was a little wild and crazy. The market did gap lower. So we opened up this morning, close on Tuesday. We gapped lower about 0.45%, ripped up, pulled back and retested. There was the positive pivot point, 66.60 is positive gamma. We came right down and just used it as a floorboard today. Came right back up to fill the gap. Ended up breaching all-time highs, getting right up to these gamma levels, 67, 10, 15, and 20. These have printed throughout the day. I'm staring at some live levels right now. I am hoping that price will not close at the highs. Not close at the highs. We hit the 50% ATR with a little bit of downside excess. We've hit the upside 50% ATR with a little excess. I'd like to see price close back within the 50% if possible. That gets us paid on our bear call spread for the daily profit play. I have a 15 by 20 for a buck. I took a trade earlier, a 15 by 25. That filled for $3. I closed out at 240. That was a quick $60 right here. So that trade was 240. And right now it's actually be upside down. It'd be down about 50 cents. So I'm glad I managed that trade on a 10 wide. If I lose and price is above 67.15 or so, I've got risk up to 20. Max risk is $4 on a market melt up that is a little improbable and low. As far as the market makers go, they have failed to contain the market today. So like I said, it'd be nice to see if prices will from 50% to 50%. If we can close below this 50, that'd be great. So that level is around 67.13. So I'd like to see price kind of stalling here at the tops and then falling back into the close in the next 45 minutes. As long as we are less than 67.15, we get paid. I do have a debit set on that one at 25 cents. I pulled in $1, trying to get out at 0.25. If we drop about 5 or 10 points here in the next maybe 30 minutes or so, that should fill. Otherwise, it might cash settle as long as we're below. As long as we are below 67.15. So on that note, this is the week in the shaded green. We do have a positive week in front of us. We did gap higher. We pulled back and retested. The market used Tuesday as support. That was the close from Friday. So Tuesday to today, even though it's choppy, we did proceed higher. One thing that is interesting, I think is noteworthy. I mentioned this in Telegram before I went live today. We have had a habit here. Let's go to a slightly higher time frame. We've had a pretty good habit since the end of July. Every time we have made a push to the upside, we have pulled back. So break the highs, pull back. 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 We've broken the highs. Now, timing-wise, is this going to be a pullback tomorrow? Is this a pullback Friday? Is this a pullback next week? I don't know, but we're going to find out. So ideally, there's a couple levels I want to see. Today, below 67.15. By Friday, I'd love to see price back below 6,700. I've got a profit trap on a broken wing butterfly for Friday. And I just like to see that. We're literally talking about like straight up bizarro land trading. This market won't go down. And it is from a day-to-day mechanical standpoint, it is driving me a little bit crazy that this market, the VIX has been retreating all day. If we look at the VIX, let me pull over my VIX platform here. So let's go VIX. Go to the 10-minute chart. VIX at 1606. It's just been going steadily lower all day. So here is the VIX on the day. We came into the overnight futures with VIX above 17. It has been smashed lower down to 16. Now, what's kind of crazy is this is just around a plus or minus 1% based on the VIX box that I have in my daily profit play. And the fact that we're going to these like VIX box levels to the upside is really, really like it's bizarre. because the market is almost willing to melt up to the VIX extreme as opposed to, dropping lower to VIX extremes. It's usually what the markets should be doing is kind of containing the melt up. But if we have like a big break of the VIX, then obviously the market can bust out a floor really quickly, and we can exceed a little bit to the downside if VIX is going higher. But the fact that we're hitting VIX extreme levels to the upside is driving me a little bit nuts. And granted, I've come out okay. I've been dinged a couple of times on some paper cut losses to the upside. Today, being potentially one of them. But as long as we are going to be below 67.15, we'll be okay. So I'm going to quickly spot check and see. I've got the 15 by 20 right now. That 15 by 20 is trading for about $1.80, which means I'm down about 80 cents. So I have some other trades that are still pending. I'm not going to force these trades in. I'm going to see if we can get down to maybe grab a couple profit or a couple bucks of profit. So right now, as I'm doing this live, if I can see this $1.85 trading for 60 cents or 50 cents, I might just grab it, because I grabbed 60 cents earlier, grab another 50. That puts me up over 110 bucks, just quick intraday profits. And hopefully we'll see it kind of behave. But 67.50 is key. The 50% ATR is 67.13. So if we're at that level or slightly lower, that is our line in the sand today. So technically my break even is 67.16. So as long as price isn't above 67.16, I'm not losing anything today. But obviously I'd like to see if I can, snag a profit as well. Okay. What else we have here? World Trades in the house. Dana says, went to the dentist, came home, 185 bucks on the day. Oh yeah, you got your teeth pulled today, right? Mike says, good day at insurance. It is. It is. And what I actually did today, this morning, I did this during my daily profit plan room. We added a VIX synthetic. So I did a trade this morning. I put this in all of my accounts. Here is my trade. Oops. Let's go to VIX. Let me make sure I'm keeping an eye on my trades for this afternoon. So there's my bear call spread that I'm watching. Watching some profit. I want price to get back below 67.15. So I'm keeping a very close eye on that one. And then let's go to the VIX. So oil, fine, futures, silver, up 87% on my futures contract. This is out to October 28th. It looks pretty good. Price is cooperating now to the downside. We're at 67.12. Okay, so this should be looking better. Up some good profit. Monitoring this one sort of right over here for $1.64. And the VIX trade, I put this on this morning. I'll actually label this one as DPP VIX, just because we took it during my daily profit plan. So I went out to November, and for $2.83 debit, it's about a $381 risk. So I'm risking $381 for unlimited upside. If we have any type of VIX rally, this hopefully can pay me, $500, maybe $1,000 of profit. So it will at least help alleviate some type of short-term volatility if we get it. And I don't know what this window is. I mean, I thought September was a window for corrections. I thought October is a window for corrections. We have a government shutdown. None of it matters, and I keep going back to this. What I'm doing is I'm taking little stabs at these daily levels. I'm trying to, sell high where mechanically the market should not be able to stretch to. That's why I sold the 67.15 today. We should see price not closing above that based on the VIX, based on our extremes, based on the market maker move, based on our plus minus on the day. All these things went into the trade. So I didn't necessarily break any rules. I'm just a little frustrated that this market is just so adamant about just pushing higher. And my least favorite thing in a 0-day environment is when price closes at the highs. If it closes at the highs or closes at the lows, that makes it very difficult, because there's nothing you can do other than be out of the money. But if we're, at these levels and it's pushing right up against those ceilings or right up against those floors, there's not really a backup plan. I don't roll my 0 days, because you're going to have to roll them for a debit, and then it's a complete wash, because tomorrow morning, who knows if there's a gap high or lower. Your option chains are way sensitive. It's not worth rolling. So I just try to keep the risk really, really tight. Okay. So anyway, long story short is we are pushing up to all-time highs, And, I've got actually, I took a screenshot of this yesterday. I had 601 in my portfolio. I'm up to 641 today. So I mean, I've got a really good jump in profit, another year to date high, up to 641. A lot of that is led on, surprisingly, and I've been in this trade for a while, and I have not been excited about it. But Pfizer finally starting to wake up, and it's up almost 14% in the last week. That has come alive in a big way. And also, we had a pretty big move on Bitcoin today. Gold and silver continue to churn along. I took some profit on Alibaba. I'm still riding Baidu out a little bit longer towards the 150 handles. I'm going to set some take profits on Baidu, by the way. Let me see here. On Baidu, I'm going to set a take profit at, I think 155 is pretty fair. Oops, wrong one. Let's go SPX. So I've got a chart alarm set at 20, at 10, and at 05. Baidu, my measured move. So we've got a nice little surge today at 136. We're green on the day. My measured move on this one is a double bottom. Gosh, I mean, what's silly is it doesn't even have to stop. Like Baidu getting to like 155 is just the center high. If we break and go up here, it's like, I don't know how much patience I have to hold this trade, but I think there's room for Baidu to get up to like 240. That to me is kind of insane, but what a good trade it would be. So I'm curious what I can do. I think it's worthwhile to take some profit if we get up to 155. In fact, I'm going to go into all of my shares of Baidu and put in a take profit at 155. If I get filled at 155, that is a big run. I've been in this thing since $80. So it's roughly $70 a share. And then I'm going to start selling a bunch of puts. So I think there is upside, but I'll just turn it into an income trade. So I have 155s. You can see here all set. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 ownership accounts. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So all these accounts all looking to close out at 155. If those close, it's about $70 a share. You can see here I'm up about $68,000, $69,000. We go up another $20. I mean, I'm not sure what the total is here, but I can add it up. Let's go 130, 130, 40, 20. So about 1,250 shares. If we go up another $20, it'd be technically $19 times another 19. That's $27 or $23,000 plus 69. That's up 90 grand. I'll be happy. I mean, that's a really big run. Granted, it hasn't been just, perfect timing. It's like I've been in Baidu and Baba for over a year, and they're just now, in the last 3 to 6 months have been cooperating to the upside. And I'm just trying not to get in the way. So I think the measure move is good. Take profit sitting up here around 155. I think there is room to get up to 240, but more than likely what I'll be doing is closing out some profit in here and then adding in some ratio spreads and some sell puts and trying to stay out of the way. If the market goes up, I'll generate the extra income, but I'm likely not going to ride those shares all the way up. I wish I would. I'm not. Just in case this thing is going to be a bigger range, I'll just sell some way, way, way out of the money puts and see if I can get the credit income that I want. Okay. The shutdown pretty much cements rate cuts. I think that's why the market was led today by a handful of stocks. I mean, you look at the advanced decline line today, we have 49.5 stocks. Not even 50% of the market is up today, but we have some big gains in Tesla, Oracle, which are top 10, right? So Tesla's top 10, Oracle top 10, over $1 trillion. And healthcare has been ripping to the upside. Johnson & Johnson is bright green at 8.55%, Pfizer 7+%, Merck, AbbVie, Amgen. I mean, these are like just off and running. Crazy, right? Look at this thing. I mean, Pfizer has not made a move like this in literally months, maybe longer. So we're sitting, $23 up to 27. I know that's not exciting for a lot of traders, but for me, from a percentage standpoint, this thing's up almost 16% in 2 days. That is remarkable considering I've been sitting on this position. And the funny part is I have a diagonal spread in addition to owning shares. So looking at Pfizer, let me see, what's my SPX trade? I just want to keep it close on this one. Maybe I can snag a break even here. I'm still down on the bear call spread, 15 by 20. Technically, we're clear. 67.16 is my break even. So as long as we're below that, we're okay. I just don't want to see price getting any funny ideas here in the next 30 minutes and getting back up to highs. But if I go to Pfizer, I have a decent chunk of shares that are all up. Okay. I mean, this is literally in the last 2 days, this jumped from like a break even trade to now like $13,000. In addition to that, I have it's out to December of 2026. So this is a ratio spread that I put in for my Project Options Edge. And I also did a diagonal spread that is out to next summer. And these are all uncovered. So initially, this was I'm buying a call that was in the money and I was selling like a 25, 25, a 26, a 25. Let me check my break even on this diagonal spread. So Pfizer, buy shares. So my ratio spread. So the campaign trade is diagonal spread 20 by 30. My break even is around $6. $6. So I'm going to ride this out a little bit longer. I mean, if we get up and the price target I'm looking at on Pfizer, now that we're starting to come alive here, I mean, if this goes aggressively, I think that we could easily get to $30. I have some fibs based on this, high to low swing. I kind of like these targets here. If we pull back to about $29 to $30, that's a very kind of the low hanging fruit retracement. If I go to this level, trying to pull back into this swing, because we had a lot of support back here in 2023, 2023, again, through April and November 2024. I just want to see if we can pull back to like $30 to $32. So more than likely, what I'll be doing is closing some of the shares, and also I might add a quick call to my diagonal spread and lower that debit and just take the profit. Okay. So anyway, I think there's room to run. We're 27.30. I got a chart alarm set here at 32. I'm going to set a chart alarm at 30. I don't want to choke off the profit. It's finally come alive in a big way. So I'm hoping that we'll just continue to kind of, I mean, it's not a stock. I'd say it's going to be like this face ripping bullish trade. But for the biggest run we've seen in literally months, I hope it's something that actually has some momentum behind it. So I mean, fair value wise, it's like this stock is discounted cash flow at like $60. We're down, from all time highs like 60+%. So I mean, it has a almost 7% dividend. This is why I had some shares. It's maybe it's that time we get like a double whammy. You can get a solid dividend in addition to price appreciation, and it's one of those times where if we go up to $30 to $32, $30 to $35. I mean, if you had the patience to sit on a crappy stock for a while, it's finally starting to recover. So anyway, we'll see. Let's see. I was new to options and COVID just ending, got assigned. So just holding out. Okay, gotcha. Have you done anything with those options, Mike? I mean, have you sold calls at all? Have you lowered your cost basis? I mean, I had some shares at $30 that was assigned, and I've drilled that cost down to low 20s. But it took a lot of time. But all this chop here, like all this back and forth chop, allowed me just to sell, pretty much like at the money or just a couple strikes above, and it just never got called away. So now that it is running, it's like I, in all honesty, I almost had I was just exhausted. I'm just like, I'm just not going to sell a call. I'm just like, if this is going to go anywhere, I'm just going to sit and hold it. And at least I'll get some dividends. I'm not going to choke out any growth if there is any. And now it's starting to rip. So hopefully this is good. But, again, not being super aggressive on the price targets. I'll be out of this thing probably in the $32 to $35 targets. So if we hit 32 to 35, I'm probably closing out my chunks of shares. And I'll also be closing out my diagonal spread. Those are out to next summer. But I'm happy to take a nice chunk of profit. Okay. Pfizer has the tariff suspended for 3 years, whereas other pharmaceuticals, yeah. I don't know why that is. I have no idea why. I don't really care. But good for them. I mean, as far as the price action goes, this is looking pretty good for Pfizer. All right, we have 27 minutes left. We're trading at 67.16. That is my break even on the day. Hopefully, we can get back down below 15 when the cash settles today. NVO, I don't think so. Is that Novo Nordisk? Yeah, I mean, this has been on the radar. I just couldn't justify jumping into this thing. The stock is down 69% from a fundamental standpoint. NVO is the ticker. I mean, it is a solid snowflake, way below estimated value. I don't like a couple of the risks that we have here, but price to earnings, 13 times price to earnings, not super expensive. Fair value, ridiculous levels. I just don't know what is it? What is it about the stock that caused the 69% decline? Right? I mean, I don't know why. So, I mean, if this is like Novo Nordisk is all about COVID vaccines, I'm like, I'm not going to invest in this. But if they're making other stuff, let's find out. So, I mean, it does look somewhat attractive, but it's big pharma. I mean, we got it's global. Diabetes and obesity care. It's like, why is the stock not at all time highs? you know, Diabetes, obesity, cardiovascular, other emerging therapy areas. I mean, that has U.S. healthcare written all over it. That's all we are is, pre-diabetic, diabetic, type 1, type 2. Is that what it is? And plenty of obesity to go around. But somehow, their stock is down 60 plus percent. So again, what I would consider is, are we able? I mean, and this is a bit of a risky trade, um, but let me look at the mechanics and the options. If I get an NVO in the options chain, maybe I can go up far enough, and maybe I can go down low enough in price. We have earnings in November. Maybe I go out to January or even into like summer. I mean, I could probably get a decent trade here, a 45 by 40 ratio spread. Okay. If this offered over $1, I'd take the trade. But it's because I'm getting a 5 wide. I can probably do this trade. This is a bit better. I'd own the shares at $40. The low here is around 45. So, I mean, if I took any ownership, I'd own it at 40. Mechanically, this trade is an 80% chance of profit. There is risk on it. It would be cheap. I think it's worth considering, like hanging on to. It doesn't cost a lot of buying power. I get a $5 profit trap. If I build this thing out, let me go to option strat here. Let me build this thing out. What expiration was that? That was June of next year. So if I go build and I do a put ratio spread on NVO, build this out to June, and I would be buying the 50, selling the 45. There's my ratio spread. So I get a potential $5 profit trap. And if I took on assignment, price would have to be below $50 or $45 rather. So, I mean, the Ivy rank is crazy high. I don't mind the trade. Let me see if I can get filled here. Let me try like $1.20, $1.15. As long as it's over $1.10, I think I'll take this trade. The bid ask is a little wide. Let me try $1.20, $1.15 on this trade. I'm gonna put this on my margin accounts. So 120 not filling. Let's try the mid price at 117. Got filled at 117. Okay. So I'm in. I'm going to put this out. This is officially going to go to my project options edge. So 117 not filling. I'm going to try a 116, 115, 116 getting filled. Okay, good. Okay, 115. 115 getting filled. I know 72. Okay, these are all looking pretty good for fills now. So I'm getting filled at 115. I'll make this official for my project options edge. Let's see here. Pending at 115. Let's try $1.14. Getting filled at 114. Okay. Couple more. All right. That trade is in. Trade is in. Putting this officially in my Project Options Edge. You find that Telegram channel, Project Options Edge. New trade. NVO. 6/18 expiration. Buy the 50 put. Sell the 45 put. $1.14 credit. This is a ratio spread on NVO. If it's less than 45 expiration, break-even price is, this is actually a pretty generous break-even. We'd have a $45 assignment, minus 5, minus $1.14, $38.86. If assigned, I'll look to repair for $3 to $5 per share or more. Okay, so trade is in. Put this in my tracker. This is a June 18 ratio spread. Okay. So yeah, I mean, mechanically it looks pretty good. This is what the build out looks like on the options graph or the risk graph. So we're trading here around $58. There's room for price to fall. Obviously, if it goes sideways or up, that $1.14 decays. So this is where I can make the profit. If I make $1.14, it's anywhere in here. So anywhere above $50 is worth $1.14 credit. From 50 to 49, 48, 47, 46, 45, this is a profit trap. Okay. And this is the day of expiration. So obviously that's right into that June expiration. And even below 44, 43, 42, 41, and 40, that's break even. And then I have my $1.14 credit. So 38, I guess 30, 38, 86 is my break even. That's where I take on risk. So we'd have to fall a decent amount. You know, if we're going to fall to $38.86, this price would have to drop another like 30%. Not saying that it can't, but I'm hoping that that's not the case. So, I mean, mechanically, it looks pretty good. Probability of profit just based on the options chain, we're sitting around an 80% chance of profit. Chance of assignment is around 19%. But my break even is, you know, risk on the trade would be about, we'd have about an 88% chance of profit on this trade as far as assignment, because we'd be below the $40 strike. So all in all, looks pretty good. Okay, really quickly, we have price back down to 67.14 on SPX. Let me do a quick spot check on my working order for SPX here. That bear call spread is still it's still elevated. I need it to be under $1. My break even is 16, 67, 16's break even. If we're below 15, then we can pull in and sneak in a full $1. Okay. Pfizer's committed to invest $50 billion in the US. Yeah, that's good. And I think what's happening is like this whole idea of, sector by sector by sector dealing with tariffs, all they have to do is say, we're pro USA. We're going to invest in the USA. We're going to build, expand. We're going to grow our business in the USA. We're going to make it better for US consumers. And I feel like it's just giving these companies the runway to just do USA business. And if you're a foreign company and you want to do business in the US, build a plant here, whether it's manufacturing, whether it's distribution, but build something here. And it's like we're rolling out the red carpet for better conditions and better terms and permissions. So, I mean, it's smart, whether it's semantics, optics, but put it on paper. Hey, we're breaking ground in the US. I'm sure that there's plenty of that going on, you know, but I'll take whatever run we get. Pfizer has been just freaking dead capital for me for a while. All it's been good at is giving me some dividends. Something like this, MO, for example. I mean, I bought this thing when it was chop suey around $40, and this thing ended up being one of my biggest wins in 2024. This thing went from 40 to 66. It's like that's a 50% gain on a tobacco company. 67% on a tobacco giant. When this thing ran up into the 50s, like I went from 40 to 55, I just started putting in calls. I'm like, this is like one of the biggest moves we've seen. So I still have some calls, but I let a lot of it go around the 55 to 60 handle. But pretty good performance overall. All right, what else you want to take a look at? Dollar index, gold, silver, Bitcoin. All these things have been ripping pretty nicely today. Dollar index, I still think the bid remains. We have 15 minutes for the close. Hopefully price will stay below. I'm going to keep a close eye on this one. We're at $1.30 now in that credit spread. We're at 67.12. Our break even is 67.16. So if you're in that trade with me for daily profit play, our break even is 67.16. Hopefully price will just stay there. I'm watching this thing on my other screen. We are below that strike level, which is good. We want price to hopefully head a little bit lower, maybe down here towards 10. 67.10 would be good. Settling back below this, the 50% ATR would be good. I don't want to see price chopping around in here. I want it to just go down a little bit. So we'll keep an eye on this one for the close in the next 14 minutes. Dollar index, gold, silver. Dollar index, I still think there's a bid. I still think the dollar, we don't necessarily take out the lows. The dollar came back to test these highs. Is it up, down? Are we going to see a higher high in the dollar? If we do, that probably means more of a pullback in equities. We haven't seen pullbacks that actually do anything other than go higher, right? Every pullback here, every dip has been bought. So there's your 3% pullback bought. There's your 2% pullback bought. There's a 2% pullback bought. Here's your 1% pullback bought. Here's your 1% pullback bought. And we're sitting here talking again at all-time highs. Now, that being said, looking at these levels, it does make me just a little bit, I'll just state the obvious. Every time we've seen prices go higher, it has pulled back. So poke the highs, pulls back. Poke the highs, pulls back. You can see that. So are we using today as a, poke the high, and then over the next day or two, do we end up poking the highs and pulling back? Maybe. Our last time we had a big non-farm payroll sell-off, that was right here. This day was a gap up on non-farm, and we dropped all morning. So could it be that as the Thursday, Friday play? Maybe. No, JRP, I got filled at a 67. It was a 15 by 20. That's the trade that I'm in right now. Ted, not an SPX. My broker settles exactly at 4 p.m. So it's all or nothing at 4 p.m. So, I mean, most likely here we have 13 minutes. My fingers are crossed that we just stay at 67, 15 or lower. If we're at 67.16, that's at least a break-even trade. It's just going to cash settle. So I'd like to see it stay less than 67.15 so we can get our full profit out of this thing. But we're bumping right into it right here. So we're at 14.92. A little bit lower would be great. A little bit lower would be excellent, actually, since we're coming into these final few minutes. So we'll keep an eye on it. Okay. Dollar index. Like I said, I think that if we have a risk-off move at all, it's going to be higher dollar to bring maybe gold down a little bit, maybe equities down a little bit. Gold is showing overbought conditions with diversions at these highs. I've just kind of thrown this out there as a warning. I'm not bearish on gold. not by a long shot. I think that's one of the silliest trades you could have right now is be bearish on gold. But in the near term, I do think it's important that you consider hedging. I think you got to consider hedging some of your gains, at least having something out there where I don't know when the timing is, and I don't know how big this is going to be, but over 500 bars on a bar count to this 200 moving average, and getting some overbought conditions going, 17 to 18% higher than this 200-day moving average. That is a ripe for a correction type move. So do we go higher? I mean, sure, but I'll say this: if we end up poking 4,000, I would say that as a nice round number target. Don't be surprised if 4,000 quickly evaporates down to 37 or 3,600. That could be a very easy correction. It's like you had your run, you hit your round number. Gold will be up 40+% for the year, and I'm looking to buy dips on gold. Literally dollar cost averaging at every moving average here with small chunks. A couple $1,000 per level. But I just want us to be aware, like, there is likely a correction coming sooner than later, whether that's in the bond market, whether that's in this rate cut cycle, which I don't know, what the probabilities look like now, but we had like an 80+% probability of October. Now look at this crap. 99% probability that October is going to be a cut. So there's your kind of additional run up today. It's like October and December, high probabilities that we have those 3 cuts for the year: September, October, and December. And then another cut in March, and then another one into looks like summer, and then it's kind of a big pause. So looks like the Fed's going to quickly get to 5 cuts by June, or I should say summer 2026, and then a kind of TBD after that. So 5 cuts seems to be the thing. 25 basis points each. That lowers the cash rate by 125 basis points. The question, of course, is, are longer term yields going to matter? Right? Are they going to matter? Maybe not. We haven't seen anything. This has not been an adverse reaction like we saw in 2024, but we're obviously not at fresh lows on the 10-year, and we probably won't be, because this is not the short end of the curve. What the Fed is cutting and the Fed is controlling is the short end of the curve. There is no way to really dictate what the long end of the curve does. So, if we are facing recessionary pressures, or we're facing a weaker labor market, this might bring the 10-year yields down lower. This interesting government shutdown position. If we don't have non-farm payroll data on Friday, I have no idea what the market's going to do with that. If you look at the data points, let's go to Bloomberg for the calendar. Look at Friday's news, and Friday the 3rd. I think we're supposed to still have non-farm, but I read this was yesterday, and maybe it's fake news, but 8:30 a.m. Eastern time for Friday. Where's it at? Does anybody see? Do you notice that am I sniffing glue here? But like, I do not see an 8:30 print. October 3rd. Does anybody see it? FOREX Factory. Non-farm payroll. I don't see a non-farm on the calendar for Friday. Did that just get removed? So non-farm is here. This is tentative. Okay, so it looks like Bloomberg removed it, but it's tentative on the FOREX Factory economic calendar. So this is the big question mark. Like I said, are we going to actually have a non-farm number on Friday with the BLS? That's the Bureau of Labor Statistics. So I don't see it here on the Bloomberg calendar. Right? We have CAD news, and then we go to 9 o'clock. The next news for the U.S. is 9:45 services PMI on Friday. ISM numbers. That's all at 10 o'clock. So, if we don't have a non-farm, okay, that's odd. I've been trading for a long time, and I can't think of a first Friday of the month that's not a non-farm Friday. All right. Final little bit here. Break even at 67.16. Come on, man. We have 7 minutes. Give us some defense. This might be one of those trades where it might not close me out at 25 cents debit. I do have the 25 cents debit sitting. So I'm in for $1. It's trading for $1.30 right now, $1.40. We have 7 more minutes of risk. Cash settles at the end of the day. My break even is 67.16. If it's less than that, I make some bucks. If it's under 67.15, I keep my full dollar credit. BLS said they were not going to release payroll. I know that's what I'm talking about. So it's not officially on the calendar. It's like I said, if it shows tentative. But if there's no, I mean, I have no idea what that does for jobs, right? Or does what it does for the market. I mean, it'd be weird, but markets at all time highs today, the day after a government shutdown. The futures market overnight was down literally 0.8%, and it went from a 0.8% move. So this was futures overnight. We did a 6 p.m. Eastern time, down 0.8%, pulled back about 0.4%. We opened today. We opened, ran higher, retested, and we just melted up all day to all-time highs. I mean, futures was knucking futs today, man. Like, that's a big swing in futures. Big swing. And we look at, today's trading, it's like, this is kind of crazy. So we gapped lower, up and down. We tested that positive gamma support level at 66.60, and it was nothing but up for the whole day. And way more so than the expected move. When the day opened, we're looking at like a plus 30 on the day. This thing has been up almost 60 points. That is way, way, way beyond what it really should have been. But, it is what it is. So my FX book, yeah. So I'm showing it on the FOREX calendar here. So this is FOREX Factory, but Bloomberg is showing nothing. Obviously we'll be live on Friday, so we'll find out. And just to be mindful of what the market's been doing for the last couple of months, we hit all-time highs, we pull back. We hit all-time highs, we pull back. We hit all-time highs, we pull back. Well, today we just hit all-time highs. So if we hit all-time highs and the market's satisfied, do we have a 1% to 2% correction in the next couple of days? Maybe. What does it look like from the trading perspective? Well, we have a buffer. I mean, the likelihood of us coming down to take out last week's low is pretty slim. In fact, the probability of doing that is very rare because we swept the highs of last week. So if we pull back at all, maybe the market still clings to positivity. But two big levels for me, it's like, I just want to see if price will stay below 6,700 by Friday. That is a broke wing butterfly that I'd love to see that get filled for profit. I've got $1 credit. I'm looking to get out at 10 cents. If there's a profit trap in there, that's like a $5 profit trap. But I certainly don't want to see all-time highs on Friday. So I guess, as they say, though, no news is good news. When you don't have news, it's like, yeah, what's bad about our labor market? What labor market? We don't even have numbers for it. So the market could do whatever it wants. It's just a weird time. And you zoom out in this chart, and I'm just telling you, like, I know that I'm taking these mechanical trades to kind of short this market, but I'm following rules on a day-to-day basis. The price action suggests, unless this 65.70 or this 65.50 low is taken out, the bears have yet to actually take control of the structure. Higher lows, higher lows, higher lows, higher lows, higher lows. If we hit highs and pull back, it's still, we have a trend line. Do we take out this low at 65.70 or 65.50? If we do, then the bears finally take the structure over, right? So we'll see. All right, now I've got some profit on the bear call spread. I think we'll be okay on this one for at least a break even or better. So right now, it's going to be close. It's going to be very close today. We're at 12.98. Stay down. Stay down. All right, we have 3 minutes. I'm just getting a really aggressive pin at 15. So to be on the safe, I hate this so much, because on the safe side is I just close this thing down for like 80 to 90 cents and get out of the trade for a small win. But if it settles below 67.16, I'm not losing anything on the trade. So let me see. I'll just keep an eye on this. We have 2 minutes left. Let's count this thing down with a live clock. Is there not just a live clock? Clock. App. Clock needs to update. All right, we're at 6714.30. Downloading updates. 1389. Clock. All right. So I was looking for seconds. I want to count down the seconds. 1442, 1457, 65. I guess we'll just watch it here, huh? 67, 1409, 67, 1353. We have the final minute here. Richard, you need price to be below 67.05, dude. I'm in at the 15 by 20. So I need price to stay below 15 by 20. All right, price is looking better now. 67.12. Come on. I got filled at 25 cents. So I got 75 cents out of that trade. All right, so I'm sneaking in a quick winner. Obviously, I don't. If I just let it go, there's my fill at 25. So I got filled in the final minute at 25 cents. It's probably trading for next to nothing. Now it's trading for nothing. So, whatever. I'll take 75. I got 50 to 60 bucks earlier. That was 60. That's 75. That's not a bad. That's not a bad win. So we settled at 11. So a 60 winner and a 75 winner. So up 135 in the day. But took this MFer right to the close. That's my least favorite for 0DT, is taking this crap all the way to the close. But on a positive note, we went from a 50% ATR to a 50% ATR. That's a big, wide range. And unfortunately, I didn't get filled on my bull put spreads. I tried to do some bull put spreads down here at the one. I think I did the VIX box, right? We did this morning. I did the VIX box in the 150, and they were nowhere close to getting filled. So, all right, 67.11. I've got a 67.10.92, and my Tasty showing 67.11.21. Okay. I pushed that up, JR. I pushed it up to the 15 by 20. So if you still had the 05 and 10, then it's a 4 loss. But the 67, 15, and 20 had another $1 there. Or that one I got filled in that one for $3 as well. So I just kind of grinded up through these highs of the day. This is not fun when the market doesn't really respect the guardrails. I suppose it did. It's like on the day, the market makers were calling for like a plus or minus 30. So we end up settling 22 points from yesterday's close. Okay. So I'll just repeat this here. From yesterday's close, the market was up around 30 points, which is exactly the plus or minus, and we settled around 22.50. From the open today, we opened way down here, and the market was way above that. We went 59 points to the upside. But this is why I use the daily profit play with the gold box indicator and the ATRs based on the previous day's close, because this gives me the measure moves. So what I'm going to do right now is take a screenshot of this. Let's make some notes in the daily profit play. So let's see, that was filled. Ended up grabbing some profits. Okay. We had center price around 60. It's just, the day was crazy, man. We came down to a low at 66.55 and pushed up, 60 plus points in the day. But when we were at, the trade got filled this afternoon around 66.90. So 10-1 expiration. Okay, and then 67.15, 67.25. Risk on that one was 7. All right. Do market makers exist? They do. And I'm sure that what they were doing today is buying calls in this positive gamma environment because we're still sitting here at that positive gamma pivot at 66.60. So as flow started to come in, they were buying calls to offset and be delta neutral as the market maker levels were getting defense at the highs. I mean, what did we call this morning? What did we call this morning? 67.55, 66.20. That's way out there because of what? We started out this morning with a 17 VIX, you know? So did the market exceed? Did the market get above my box? I mean, this is the stuff. Market makers can survive in all sorts of areas, but we rarely should see prices above a 100 ATR or below 100 ATR. Even with today's gap, it still was less than the 100% downside ATR and less than the 100% upside ATR. The only problem is I was dancing with the 50% ATR, and we called that this morning, right? 50% ATR, and I said these are very gettable targets every single day. So what did we do? We got the 50% ATR to the downside on the open, and we ended up running to the 50% ATR to the upside. So, I mean, it was about surviving at those thresholds. So, market makers, sure. I mean, they did their job. The plus or minus 22 from yesterday's close, they did their job. If they carried anything over from yesterday, it was a plus or minus 22 and it was a 30 on the morning. So they did their job. But from the opening prices, there was obviously some maneuvering going on. But again, just happy that we carved out a couple bucks. Okay. All right. So I'm going to take a screenshot of this and we'll make a note. I'm going to put this in the ATR tracker. So gap lower, open at the 50% ATR down. And price found the 666. Was it 60? Yeah, 6660. 6660 positive gamma pivot and bounced hard and drifted to all-time highs and higher, targeting the 50% ATR up, which was 67.13 and closed at 67.10 to 67.11 end of day. Our 67.15 by 67.20 survived. Okay, so closing price 67.11. Take a screenshot, dancing around between the 50% ATRs. So, I mean, we talked about this 2 days this week on the masterclass. A 50% ATR, 50% ATR. It's challenging when price is right at it, and you're like, oh, I don't know, maybe I mean, but at the money this morning, it's like this trade offered $2 in credit, $2.50 in credit, maybe even more. It could have been an at the money. You could have gotten $2.50 on this trade, maybe for a credit spread, and price went up all day. But you've got to be willing to take that risk. So I went higher. I went higher for the bear call spreads. I went lower for the bull put spreads, but ended up grabbing some profit. So anyway, screenshot right here. Let's go copy link, and it's pasted officially in the ATR tracker. So my daily profit play, I've been doing this for the last couple of days. We're just going to keep some tabs on this stuff since I created the daily profit play indicator. We're tracking the date, our ATR levels, where price is closing, the screenshot to see how the daily profit play indicator boxes and ATR levels are responding to price. Just, kind of giving us that reinforcement of if we trade daily with these, I want to sell the extremes, right? Why did I safely take a 50% ATR high today? Because we were gapping lower. The probability of us going through this, I mean, we expected a 30-point move on the day. The market gave us 60. I mean, I'm just glad that I recognize there's a 50% ATR right there. Because if I was like, well, I'll just sell 30 points higher. Well, you got toasted on that trade, So I just think that this matters day in, day out. The days close to this level, and tomorrow we start this indicator from 67.11. So I'll do this. We'll go 67.11, and we'll have a new box for tomorrow there. So now tomorrow, we will see if we dance around between the 50% ATRs or we go higher or lower. I don't know what's going to happen tomorrow. I don't know what's going to happen Friday, but we'll do our best to figure it out. Okay. All right. All good. Okay. So survived. I mean, these are not my favorite days when the market is doing more than what the expected move is and closing near the highs. I'm just happy that we at least had a retracement of 18 to 11. Might not seem like a lot, but it was enough to get that line in the sand to pay us. 15. We needed 16. It paid us. So overall, I'll take the win. So there are the trades. So win. This one was a new trade that filled today. So I have a 68.25. This is by next Friday. I'm hoping that price doesn't want to go up another 115 points. So if the market's going to hit new highs and pull back, there's another broken wing butterfly that should offer us hopefully 90 cents out of the dollar. Okay. All right. And that was my inverse trade yesterday. Broken wing got filled today. We're watching, and we'll see what the next 2 days brings us. All right. I'll let you go for today. Come back and do it again tomorrow. So a couple things on the calendar. We had a great class today for pinch point scanner. I'm going to do another one tomorrow. We have more trades to price in. I think we took 5 trades today. 1, 2, 3, 4, 5. Yep, 5 trades on pinch point scanner. Set it and forget it. We got the pinch point set up. Take profits are in. So the best part is out 60 days, 80 days, 90 days. We just let the broker take care of the work and close us out for profit. We put in an official trade today on Crash Insurance Masterclass. I issued that kind of as a freebie for my daily profit plan. We had trades in for daily profit play. The trades from Monday on Waterfall are active. And I'm doing a masterclass on Project Options Edge on Friday. So a lot of teaching this week. Daily profit play, 2-day workshop, pinch point live trading session today, another one tomorrow, and then Project Options Edge on Friday. If at any time you're curious about these services, you want to ask our team, check out the website, chrispulvertrading.com, or email our team and ask about these services, support@prosperitypublic.com. Okay. All right. I appreciate everyone being here to close up the session with me. Hit the thumbs up button for me. Support the algorithm, the channel, the content. Check out my videos if you want to check out, Trading 101. Keep it seriously simple. Trading session strategies. I've got 70 or 80 videos on my YouTube channel that are all just timeless education. So check them out. And I'll see you tomorrow in session. All are welcome to join. This daily profit plan session is free every weekday, 9 a.m. Eastern time. If you're in my Telegram, you can join it every single morning. So here is my Telegram. Okay, I'll post it right here. So Chris Pulver Telegram. There you go. And also, if you'd like to opt in for the trading sessions, I'll share another link. Daily profit plan. Live session, 9 a.m. weekdays. That's Eastern time. And free to join. Okay. Lots of pinch point trades stuck in the dead zone. That's kind of the point, Richard, right? Because what are we doing with those trades? The dead zone, okay? The dead zone that's what we want, right? We want compression so the energy has to go somewhere. So what those are about to embark on is a volatility expansion. So we want dead zone trades. We don't want to chase energy. We don't want to chase things that are already moving. We want to be in the trades when the market starts to move. We're already in the trades getting paid. So all the trades today worked out. Probability wise, we've got good extremes and we got a nice volatility compressions, and we have a realistic take profit with a close to 100% return. So if I can hit a 30, 40, 50% winner, we're having the potential to get paid 100% return on risk. So I take a slightly smaller take profit, hit 30, 40, 50%, and that's why our winners are like 84, 85%. Okay. Yep. But pinch point was solid. I mean, we've got like 40 some stocks on the scanner, and we're going to have another live class tomorrow. So, I mean, everyone can get their hands on the scanner if they want it. I think I'm doing a webinar on it tomorrow morning. So if you'd like to check it out, these are all valid trades. We took 5 in this group, and I've got this thing priced out to. I think we've got to start around this. I think it's EWBC. We're starting here tomorrow. If you can see my mouse, EWBC down. We're going to keep pricing these out. These are all pinched and coiled, ready to make some moves. So, a pretty good watch list. All right, tomorrow's a new day. I'll see you tomorrow. Thanks, everybody. Bye.